The lifting of lockdowns and government stimulus spending in many major economies is encouraging oil producers to ramp up output. In a meeting on Tuesday, the Organisation of Petroleum Exporting Countries and their partners decided to ease supply cuts put in place at the height of the pandemic last year. The decision comes even as some economies are facing a resurgence in COVID-19 cases. Mobin Nasir reports.
It's all hands on deck at Basra's Khor al-Zubair port in southern Iraq. Crews are working around the clock to build a new terminal that will boost the country's ability to export oil.
The work is continuing day and night in Khor al-Zubair to speed up the operation of takeoff and docking of ships and the discharge and shipment operations of products and goods.
Neighboring Iran is also hoping to boost its fossil fuel shipments if it can strike a deal with world powers over its nuclear program. The expected increase in global crude supplies is just one of the factors influencing decisions of the Organization of Petroleum Exporting Countries. Back in April 2020, OPEC and its allies cut their collective production by 9.7 million barrels per day as COVID-19 hit global demand. By June, these supply restraints had been eased to 5.8 million barrels per day. And as economies began reopening in April, the cartel decided to end production restrictions and ramp up output by 2.1 million barrels by July. Its members met again on Tuesday, reiterating their commitment to gradually increasing output.
A robust recovery in the U.S. and Europe has given OPEC Plus the confidence that markets can absorb additional barrels, despite the prospect of more supply from Iran should a nuclear deal be revived, and a COVID-19 resurgence in Asia, most notably India.
That's despite the resurgence of COVID-19 cases in some countries like India, where business activity is likely to take a hit. Some analysts say the unprecedented level of government support launched by the US, the EU, and other major economies is boosting household spending, even where social restrictions remain in place.
One of the major factors into this systemic change that we have seen is, of course, because of the COVID, which means that we have seen a major increase of imports, for example, like in textiles and medical protective equipment. So much of that has to do with the fact that people are actually, demanding these items which were not really amongst the household goods that people would buy before. But also, one major factor we can see here is that COVID really changed people's consumption behavior.
And as the US prepares to launch a multi-trillion-dollar infrastructure plan, OPEC expects oil demand to rise by another 6 million barrels a day in the second half of this year. The price of crude has already shot up by 30% since January, and it spiked again on Tuesday after the OPEC Plus announcement. That's likely to help major oil producers rake in more money even before they step up supplies. Mobin Nasir, TRT World.
Well, let's get more on this now with Jonathan Lamb in London. He's a senior oil and gas analyst at Wood and Company. Welcome to the program, Jonathan. As we heard there, we are seeing oil prices bounce back right now thanks to a recovery in demand in places like the US, China and Europe. But in terms of the global economic recovery, it really is a tale of two worlds, isn't it? Because in places like South America and Asia, we are seeing another surge in COVID-19 infections, which has prompted the return of lockdown measures in those parts of the world. How will that affect the oil price going forward? Is that going to hold back the gains in crude?
Well, I think OPEC in many ways is walking a tightrope at the moment because we can see demand coming back, as you say. Europe and the US is looking good. China's been looking good for a while. But in many other countries, like India is a very good example, we're seeing demand being very crimped by COVID-19. And even in those countries where there's a good recovery in demand, I think it's still going to take a long time before jet fuel, for example, comes back. I'm sure that people in Europe will be going on holidays this year, but business travel is going to take a long time to come back. So it's a very difficult balancing act to supply the market with the extra oil that it needs, because obviously the cuts were very big. but not to overdo it such that the market is flooded with oil. And I think that's why they're taking this very cautiously.
That's right. It's hard to believe that last April is when we saw West Texas oil plunge into negative territory for the first time ever. Now it's nearing the $70 mark. Brent crude has surpassed $71. And OPEC, since last year, has really spent the bulk of its time looking to prop up prices by, as you say, introducing those drastic supply cuts. We're now seeing the OPEC Plus group really slowly, cautiously starting to ease some of those supply cuts. But as demand picks up faster than many people had expected, will OPEC Plus be under pressure to perhaps ramp up production this year?
I think there is pressure. We tend to think of OPEC as an organization that wants as high an oil price as possible. But there are constraints on the other side as well, because given the global economic outlook and the weakness in global economic outlook at the moment, they don't want to be the ones that really kill the recovery with oil prices that are too high. And they also don't want, they've been very lucky maybe so far that there's been very little increase in output from the US, which is what we would have expected in previous times when oil prices were rising. So they don't want to push that price up too high, or we could see a lot more US oil come back, and you could see a crimping of demand. So they want to walk the tightrope between too much and too little, and keep the price, I think, within a reasonable band that's good for them, but isn't too bad for the consuming economies.
And what is that reasonable demand? Do you expect that OPEC Plus will try to maintain the price at around $70 or so?
Yeah, I think if we look at where the price has been over the last few months, it's been creeping up towards this level. I think very much further up than this, if you get up towards 80, it's probably in a region that would be a little bit uncomfortable for some of the consumers and might raise questions for some of the more, let me say, commercially minded, level-headed members of OPEC. I mean, there are some countries within that would like it as high as possible, but I don't think that's a universal thought.
Okay, Jonathan Lamb from Wood and Company, always a pleasure. Thank you again for your analysis.
Thank you very much.